One of the things that I pay very close attention to in Bitcoin is this line here, this uptrend line. This is Bitcoin's 80-day cycle, low VTL. And for those of you who joined by watching videos on YouTube, I know that lesson on Bitcoin is not out yet. The idea is to have it out sometime late August, maybe early September. I apologize. I have been busy working on model stuff, tweaks, and what have you, and that has taken priority over pushing out new lessons. But as the school year starts, I'm probably going to be a bit more focused on those lessons. The Bitcoin net lesson is coming up next. That said, one of the most important takeaways from that lesson, for those of you who did watch it, is that the 80-day cycle, there is an 80-day cycle on Bitcoin. We track that cycle using this filter here, which is a 20-day. It's a 20-day filter. We'll move it backwards by 10 days. I'm going to leave this on for a while because I think it's going to help with the explanation of where I see the market right now. So you can see here, all of you should have watched, I believe it's the second lesson where I get into how to use filters. This filter is attuned to an 80-day cycle on Bitcoin, and it is the dominant trading cycle on Bitcoin. Up until this bull market, by that I mean the one that started in November 2022, this was the dominant cycle. This was the cycle you could always count on seeing, no matter what the market was doing. I believe that as of 2022, and especially after the ETF was approved with this new cohort of people, it's a Wall Street dominated Bitcoin market now. And the 320-day cycle, to get back into this 80-day cycle, as you know, every cycle has FLDs and VTLs. And what I taught in the in lesson 2 is that VTLs, the trend lines that are constructed by connecting two consecutive highs or lows of any given cycle. This is an extremely powerful tool that, in my opinion, not enough people are using. Like, a lot of people use moving averages or oscillators or Fibonacci's or all of that stuff. Not enough people use this simple tool, this trend line tool. And what I believe the model, the cycle model that Hurst developed, what it gives us is clear rules for how to use. Forecasting model has been on fire, touching wood. Yeah, I want to get into that actually, Marcos, because it's been on fire except until we got to July 14th. But all right, whatever. So the model is giving us clear rules for how to draw trend lines. Most people, and I've met extremely successful traders, if you will, like Martin Armstrong, I know relies on trend lines a lot. I don't know if you follow his work. He sometimes occasionally will post a chart with a bunch of lines drawn. And I've been watching those trend lines for 13 years now. No, actually 13 years since I met him personally. I think I've been reading Martin Armstrong since 2008. I think it was 2008. He's actually one of the reasons I dropped out of college. I just looked at his life story and the body of work he had produced, and this guy was saying academics are all, they're full of it and they don't know anything. And there I was going to college, and eventually I had a bit of an existential crisis because my professors were telling me that the crisis in 2008 had taken place for some certain technical reasons, and this guy who was clearly accomplished was saying, no, that's not the reason. It's these other things. And eventually I kept reading, had an existential crisis, dropped out of college, and dedicated myself full time to, among other things, reading from Marty's writings full time. So I know how the guy's head works, and he is brilliant. However, when it comes to trend lines, he's all over the place. I've seen him draw weird trend lines. Now, I think his model is writing those, so there must be some rules for how the trend lines work in his model, but he'll do things like draw this trend line and then project it forward, and then maybe this acts as support now in this correction. And I'm like, well, that doesn't make any sense. It's just connecting any random 2 points. Like, he will, for example, connect, to use my model speak, or Hurst's model speak, 20-day cycles that also are 80-day cycle lows, and somehow that's projected into the future, and somehow that's supposed to mean something. I don't think this means anything. So having clear rules for how to draw trend lines gives you what Hurst called valid trend lines. And these valid trend lines, in my experience, are extremely powerful. Now, I only draw in my charts, I only draw 80-day cycle VTLs, 80-day cycle valid trend lines, and 320-day cycle VTL. It's the black one here. So normally, if you're looking at a chart that I made, that I drew, I use orange for the 80-day VTL, and I use black for the 320 VTL. The reason I use black for the 320 VTL is because it lines up. I sometimes call it a bear market indicator. If any crypto asset crosses below that, it is in the red zone. It's probably a sell, and just you should stay away until the trend becomes more clear. There was an exception to that rule actually recently with Ethereum and Solana, and I'm sure we're going to get to that in a minute. However, the 80-day VTL is extremely important in Bitcoin because it tells you whether the market is bullish or undergoing a consolidation or a pause. It actually lines up, the crossing of this 80-day VTL lines up, I would say, most of the time, not always, but most of the time, it lines up with 320-day cycle corrections. So whenever Bitcoin crosses below the orange line, what follows is this, a big correction. I can go, and in fact, I will. Let me go back to the beginning of this bull market. I'm sure you've seen this before. Those of you who attended AMAs earlier, maybe last year, you've seen me do this, but I want to do it again because it is remarkable. And every time Bitcoin, why do I have so many lines on these charts? All right, okay, so every time Bitcoin crosses below the 80-day VTL, at least a 2-month correction follows, at least. And the market always goes into a pause that lasts, like I said, at least 60 days. So the first, and we've had one every year, which is kind of unusual. We didn't have those before. So here's the 2023 VTL that was crossed. This is not the only VTL that we can draw in 2023, but this is the one that was crossed. This is the one connecting 80-day cycle lows in March and June of 2023. And you see the crossover here. Now, this one didn't actually translate into a sell-off. I want to be clear about this because we don't always get sell-offs when the VTL is crossed. In this case, we didn't. In fact, we had a bit of a crash in August of 23, and I remember this very well because I was on an island in Greece and I was on my phone hedging, buying puts ahead of this crash because sometimes I can just the act of getting close to the trend line is quite bearish. So just the fact that prices were getting close to the VTL were sometimes that alone indicates that the VTL will eventually cross and this long consolidation phase will begin. And that's what happened in 2023. So I was buying these puts. Eventually, those puts, I believe, expired worthless because the market crosses the trend line on August 17th. And if you draw a line, just a straight line from the closing of that day, you can see that there was not a lot of follow through after crossing that trend line. However, the market was paused. You can call it dead for 3 months. In fact, it would take 3 months for the price to break out on October 17. I believe it was the 17th. Maybe I'm wrong. No, it was the 23rd. So even more. It was more than 3 months before we got a breakout. And admittedly, the correction did start on July 13th. So July 13th, just like now, we're having a top, then a crossing of the trend line here, which confirms that this is not just your average correction. It's going to last a while. That's what it tells you. And then what follows is this very long consolidation phase. So that's 2023. Then we fast forward to 2020. We fast forward to 2024. We have the same thing. This time, we got a very early warning of what would happen next. So we get this trend line here. This connects the 80-day cycle low you see here on January 23rd of 2024, and then the low on May 1st, I think it was. Yeah, so it's a low on May 1st, and then that gets crossed, that trend line is crossed in the middle of June 2024. What follows is again, multi-month correction, and notice that, well, in this case, we did have some downside. We did have some downside. So we cross the trend line, Bitcoin goes down from 60 plus 65, 66, all the way down to 54. But the thing that stands out to me is the length of the correction. It's not the magnitude. In fact, one thing we can say is that as more Wall Street institutional types have gotten involved in this market, those corrections are not nearly as severe as they used to be. It's about 20, 30% tops. That's the positive. The negative is that they last a lot longer. Personally, as a trader, as somebody who thrives on trading volatility, and all my models thrive on trading volatility, I would rather get a 50% correction like that in a month and then back up to all-time highs. I prefer that because I can trade that. I can't trade this. When Bitcoin does this and it just goes sideways and goes nowhere for months, I can't trade it. I can't do anything. I mean, I can trade some short-term strategy, which I do have. They're posted on the Discord. This is a 5-day trading strategy, which you can deposit your funds into the wallets if you want, or you can just follow the trades. You can just see what it's doing and copy the trades. Up to you. That's a very short-term trading strategy, which did make money, I believe, in this consolidation phase. But the big strategies where you're just looking for that breakout, looking for all-time highs, they don't work. So we have this crossover here in the middle of June, and then Bitcoin doesn't do anything for months. The breakout was when Trump won the election in the United States. It was on November 4. Although, admittedly, if you draw the up VTL, because we can draw the low VTL as they're called. We'll connect lows. If Bitcoin crosses below that VTL, that tells you that you're entering a consolidation phase. But you can also draw the high VTL, which I'm going to do here. And these are the 280-day cycle tops that we had back in 2024. And when Bitcoin crosses above that, let's change this one. Let's make it this one green because this one's bullish. Once that VTL is crossed again to the upside, I believe this was in late September. Yeah, so in late September, we have 3 consecutive closes, or 4, depending on how you draw the trend line. Above this a high VTL, and that tells you that the market is ending its consolidation phase. Technically speaking, that means when this high VTL is crossed, the more recent low, the more prominent recent low. I actually struggled to explain that when I recorded the lesson. But in this case, the most recent low, what I mean by that is the lowest low that took place before this breakout, before this crossing of the VTL. It took place here in early August. So in early August, we have a 320-day cycle low. That's what the crossing of this green line means. We draw the high VTL, and when prices rally above, that's it. The correction is over. We have a 320-day cycle low. We can look forward to a breakout. That is exactly what happened. Like I said, these breakouts, these VTLs are very powerful. And I've said this, I think, on every other lesson that I've made. You should always draw these trend lines. They are super powerful, especially on Bitcoin. Bitcoin is kind of like the gold of crypto. And by that, I mean that it's quite predictable. It's quite cyclical. It is easier to trade on other altcoins. This VTL works extremely well, I would say, across all of crypto, but it can fail. It can give you fake false signals. There's a bit more noise in the altcoins, but in Bitcoin, they work remarkably well.